as you were rightly mentioning, that 15% lower circuit is what we are seeing on Zee Entertainment. And not just that, after the call-off of the deal, a lot of brokerages have downgraded the stock post the merger setback. So what's the way forward for Zee Entertainment and what the investor should do at this point in time? That remains the key question. So let's get in more details on this. Firstly, what's the way forward for Zee Entertainment? And for that, Somit is joining us. So Somit, what's the analysis saying that what could be the next step for Zee?
Well, after a lot of speculation, finally the announcement is out and this merger won't be going through. That's what Sony has said. Now, firstly, let's try and understand what could be the potential reasons why this merger would not be going through. Firstly, if you see, the industry dynamics has changed a lot since the time the merger was announced until now. In fact, because of the change in industry dynamics, the profitability of Zee Entertainment has also come down sharply. Now, since the announcement of merger, if you see, Zee's EBITDA and PAT has declined by around 38% and 48%, that is over FY21 to FY23. Apart from that, a few of the subsidiaries that Sony had specifically asked Zee Entertainment to shut down and to stop dealing with them, that had not gone through. Now, if you see, even after Sony's request, Zee did not close or divest these subsidiaries. Now, Zee's investment in Margo investment was still appearing in the books, and as part of the merger agreement, Sony wanted Zee's Margo investment to be disposed of and not included in the merged entity. But as of date, the matter was still not closed. Apart from that, there was this issues with the appointment of Mr. Puneet Goenka. Now, as per the earlier agreement, he was supposed to be the MD and CEO of the merged entity, but because of the SEBI's ongoing investigation, Sony had clearly mentioned that Mr. Goenka could not be a part of the merged entity. Now, there were a few news reports that he denied from resigning from the board, but interestingly, Zee yesterday said that Puneet Goenka had agreed to step down as the MD and CEO of the merged entity. So we still do not know what is the clarity on that part, but these are the potential reasons why the merger might not have gone through. Now, as a stock, if you see, Zee Entertainment has more or less become a trading stock than an investment stock. After the termination of this merger, nearly 10 brokerages have downgraded their rating to either neutral or sell on Zee Entertainment from a buy rating earlier. The target price, the consensus target price of the analyst had come down or had come very near to the current market price. It's now around 15% only higher compared to what it was there earlier. But this 15% higher is also because of the today's downfall that we are seeing in the Zee Entertainment prices. Earlier, if you see, the consensus target price was nearly 40% higher compared to the current market price. Now, the key question here pertinent for Zee Entertainment is what's the way forward. Now, what we spoke to experts, we scanned through a lot of brokerages, and what we understand is the first thing is that legal proceedings will continue to hamper the stock prices of Zee Entertainment. Now, there's this battle with Sony over the non-compete fee. Then there is ongoing legal proceedings by various creditors on the SL Group. And earlier, Zee had also signed an agreement or contract with Disney for sub-franchisee of sports right. Now, analysts and experts believe that Zee might not be able to fulfill this commitment, given that when this agreement was signed with Disney, there was a potential merger happening with Sony. And now, given the fact that that merger is not happening, this commitment might not also be fulfilled by Zee Entertainment. Apart from that, what brokerages and experts are expecting is that there could be a potential M&A going forward. A white knight might come forward for Zee Entertainment and might look to acquire Zee Entertainment. There could be a potential hostile takeover also for Zee Entertainment, given the sharp fall that we are seeing in the share prices, and the leading candidates who could be up for this takeover or could be a white knight for Zee Entertainment are the Ambani Group and the Adani Group. Apart from that, what brokerages and street is expecting is that there would be a definite overhaul when it comes to the board and management of Zee Entertainment. Now, this is because the promoter holding is as low as just 4% and only 51% of the shareholder vote is required to remove a director or to change the board of the company. And what street is expecting is that there could be a likelihood of a quick action from the non-promoters going forward. So keep an eye out for Zee Entertainment. A lot of action is still expected in the stock going forward.
Absolutely, a lot of action already taking place as well in the stock. Thank you so much, Somit, for actually rightly articulating what exactly happened, what may have led to the deal falling through, also what brokers are saying, and what may be the step forward coming in for Zee. Thank you so much, Somit, for that analysis coming in for Zee Entertainment. And let's bring on board our guests for today. We have Kunal Bothra as well as Rajesh Agarwal joining us on the show. Very good morning to you, Kunal, as well as Rajesh. And Rajesh, yes, we all were expecting We wanted the news to be out soon because this was actually lingering for a while now. You had a lot of talks on either of the sides, and maybe the deal will go through or may not go through, may not had more weight actually when you talk about the way how things were developing of late. Now that finally we have clarity on it, that the merger will not take place, what should investors do in particular, given the fact that I'm sure there are a lot of investors now trapped in the stock, isn't it?
Good morning, Cheryl. Good morning, Srishti. Good morning, Kunal. You said it right. A lot of investors have been trapped. But I think our viewers would recall that I have always maintained that when there was so much of uncertainty in Z, one should have avoided that. I have told repeatedly so many times on media platforms. But still, going forward, what we see in this deal is that once now that the deal has been terminated, the $10 billion dollar deal, I would say, uh, this would this is a major setback for the shareholders because most of the shareholding has been being held by institutions, and now we need to see how they react to this because they are the major shareholders holding around 70%, if I'm not wrong. As far as the operations of Z is concerned, GEC, it was majorly into GEC segment that were doing well. Some of the program were having a good TRPs, but and then it's almost debt-free company, but we see receivables going up. And we now need to know how the promoters, who hold only 4% a stake in the company, how they react to this going forward, and what is their strategy. Because as far as media news is concerned, I think Sony is going to claim some damages for the breaking of deal. Most probable scenario would be somebody coming in, as Soumitra was pointing out, two big corporate houses vying for this company. And if that happens, if that kind of news, something happens in the near future, that would be a major upside for the stock, for a major relief for the existing shareholder. But at this point of time, I would say one should avoid the stock. Somebody holding the shares should continue to hold for some more time, let clarity emerge, and then they can take an action.
Okay, so that's the fundamental take coming in on Zee Entertainment. But Kunal, coming to you, like Somit was mentioning, that more off late we have seen Zee becoming a sort of a trading stock, very volatile movements coming in, and for today there was no chance for the investors actually to get out of this because since the morning the stock was locked at a lower circuit. Any support levels that you are seeing for Zee Entertainment, and what's your take on the charts?
Very good morning to all of you. See, my sense is that not to catch a falling knife, there are more than 1,500 stocks listed on the NSE. You don't have to be just about fixated towards one stock because it's fallen by more than 15% so far today, and I think it's come back sub the 200 levels. I think even last time around when you had seen a similar kind of a price action for Z, the stock had actually fallen down from 250 levels to I think 125, 130 in a matter of few weeks. I think in 2020 end. I think, I'm not expecting a similar kind of a sell-off, but then, the stock would take a lot of time to get into recovery. Maybe I think the stock would probably lie low, over weeks and months to come by. So I think why invest the hard money into, such kind of names, especially when it's going into a very sharp kind of a negative downtrend. So I would suggest an avoid on Z. And my sense is that, one should try and stay away, not look to catch the falling knife.
All right, avoid catching a falling knife is what Kunal has to say on Z. On that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll start taking your query and briefly talk about the railway stocks. Don't go anywhere. We're supposed to discuss the railway stocks in our lens segment, but the move in Zee Entertainment made us actually focus on that particular counter first. But yes, we are trying to now decode what's exactly happening in the railway counters. And in fact, we have our experts today, Kunal Bothra as well as Rajesh Agarwal. And let me actually kickstart with this discussion with actually all the queries that are already pouring in for railway stocks. We have one coming in from Sridhar, whether he wants to know if he can now look to enter IRFC and IRCTC at current levels for the long term. You have even Srinath also wants to know that given the fact that today you're seeing a reversal in the railway counters, is it the right opportunity or the right time to buy into these counters? Even Sangeeta wants to know fundamentally, do you think the railway stocks are a place to be if entered right now? So the floor is open. What's your take, Rajesh? Do you think fundamentally the valuations that these companies are trading at make sense for somebody to enter right now, or should wait for some more time, given the fact that all of these stocks have already seen a parabolic rally, isn't it?
You said it right, Karil. They have witnessed parabolic rise. Railway stocks were on a joyride. They were moving like anything in the last few months or few quarters, I would say. Many of the stocks have become 10 beggars, 5 beggars, 10 beggars, like that. Even in the last 1 month or so, some of the stocks, if I'm not wrong, has gone up by 50, 60%. That's mind boggling. Uh, Valuations have become overstretched despite the fact that these companies are sitting on a good order book on future projections, that a lot of new orders for wagons, railways, modernization of tracks, modernization of stations, and new launches of trains would take place, but the valuations have gone above the roof. But still, I won't say that the party is still over. It might be some sort of profit booking, but for a new entry, I would say only few stocks which are on a better valuation, I would say, or they have not run up that much, would be a better choice. One of them being IRCTC. It's basically into four divisions: ticketing, rail near, catering, and tourism, and all of them are doing well. The numbers have been pretty well. Uh, it's a debt-free company. Launching of Tejas and Vande Bharat would be a boon to them. Tie-up with Zomato is another positive point. They have decided to move out of railway catering, that will be non-railway catering to do. And these are some of the things that are going to give good numbers in the coming years or so. And the best part is it's not run up like the way the other railway stocks have run up. So I would say IRCTC can be a good buy. Another one can be Texmaco Rail, where the order book is quite high, the numbers are doing well, and it has also not run up that lot. So you have to be very selective in this pocket. And yes, the story is still there, but some profit booking that has happened today might continue for some more time. So one has to be very cautious, cautiously positive, I would say. We are into these this sector, and one can pick and choose once some more amount of correction takes place.
The valuations look a bit overstretched at this point in time. Wait for some corrections, and IRCTC and Texmaco Rail could be better bets out of the whole railway pack. But Kunal, coming to you, because we have seen a lot of these breakout happening in these railway stocks. But as of now, do they also look overstretched in terms of the technical chart pattern, and any of the stock you still like at this point in time?
Well, yeah, definitely. I think the space is overstretched, overbought. There are many indicators which are suggesting that the stocks have run up exceedingly high. You're seeing the stocks at a 200% divergence from their 200 moving averages. For example, IRFC, the 200 DMA is still around 60 rupees, and the stock made a high of, I think, 180 approximately. That means a divergence of more than 200% for the stock from its long-term averages. These are exaggerated kind of moves. So I would suggest to stay away from the space. Even after the last 2 weeks of a 30-40% rally into these stocks, because on the way down, when these stocks go into a sharp correction, the correction could be severe for these names. So not to just venture, because these stocks have corrected 5% from their yesterday's or Saturday's closing levels. I would believe that wait out for a significant bout of correction for these stocks. Only then I think one should look to venture in, not at current levels.
Do not venture in at current levels. Wait for a significant bout of correction in case you are looking at this space right now. But Kunal, if somebody is already making profit, book partial profits or complete profits?
I think it makes sense to book full profits over here because of the exaggerated indicators the stocks are showcasing.
All right, so that's the take coming in from both of our experts when it comes particularly to the railway space. But on that note, let's kickstart